No, that was literally it. It was just for the young adults. Like, when should they plan on jumping in with the condo market being as low as it is now, or as high in supply as there is now? You got the pick of the litter, right?
Yeah. And will it get worse?
Look, I get it. The Toronto real estate market is confusing. Whether you're a new or experienced investor or just looking for a home to raise your family in, join us at Broadview Table Talks as you sit around the table with my friends to talk about the real estate and the ever-changing market in Toronto.
Welcome to another edition of Broadview Table Talks. Finally, we're back on the air. It's been a while since we've been doing this. I think our last one was in December. So sorry for that, guys. So thanks for tuning in. Today, we're going to be talking something cool. You want to kick it off?
Well, I just wanted to actually bring up the topic of, and I know we've talked about it a lot, but are houses actually becoming affordable now?
Yeah, because I guess everyone's talking about the interest rates coming down finally.
Yeah.
And prices still being low. We haven't seen a huge uptick in prices. Actually, you pulled the last stats, right? What were the last stats recently?
I mean, I think the average detached home is still pretty competitive in Toronto. It has gone down from previous years, but not too much of a difference. I think the difference is more the condo market, as well as some rule changes, such as like a mortgage rule change, making housing more affordable.
Huh?
The new mortgage rules of how much you can afford now with it.
Or the minimum down payment.
Yeah, the minimum down payment.
The tier system, right?
So it went up to 1.5 million. Now you can get same machine insured, because before the limit was 1 million, right?
Yeah.
So,
Therefore, which kind of makes it more affordable in the short run, in the short term.
well, it just makes it so that you have less down payment.
Yeah.
Ability to less down payment. So, okay, year over year, the stats are the number of sales have actually come down, and there's more like
almost
50
8%.
How much?
Almost 8%.
8% volume of sales from year over year, but month over month's gone up from December to January, which is kind of expected. You know, no one's really buying anything in December. It's kind of January's a new year, but it's not the kickoff that I was hoping for, that we're all hoping for, right?
No.
Average prices are still the same. And the thing that really alarms me, of course, has been alarming for a while, is the active inventory has gone up by close to 50%. I think like 40 something percent, which is not good. I mean, that's just a micro, year over year, month over month, stats. We're looking at the overall trend and what we think it's going to be. Right. So, there's a couple things on the table that are obviously going to change our market crazy. Like interest rates were supposed to like stop cutting, as you know, right? Like this is like pretty much the last one people were calling for back in January 29th. Now the Trump tariffs came into place, right? Which is going to completely affect the market, as you know. Basically it will screw up the employment, because the economy is going to screw up. I mean, essentially it's very simple. For those guys out.
Now they're saying like one more big cut.
More. It's actually talking about like 6 cuts.
It could be a substantial number of cuts just to stimulate the economy based on the tariffs that we're seeing.
Yeah, so the BMO chief economist Doug Porter just recently came out saying that there's going to be 6 potential cuts for the end of this year, which they were actually going to stop now at 3% for the overnight rate, right? So another 6 cuts at quarter point each, we're bringing it down to 1.5%. So with the Trump tariffs, if you guys don't know, really, essentially what will happen is that anything we bring into the U.S. from Canada or Mexico, so anything we export to them, anything they import, would have just a flat 25% increase markup taxes, which they collect 10% on oil.
Yeah. But as of today, February 10th, wasn't there an update on that?
It's on pause, right?
Yeah.
So
For 30 days, right?
In March. That's right. But it might come back in March. Many people are speculating that like it may not actually happen, and he's just using this as a negotiating tactic for other things, such as the fentanyl issue and the border
security.
Security. But who knows, right? Like these are threats. These are constant threats that Donald Trump is giving us. And it's something that we should diversify his economy away from. But that being said, it's not happening just yet. We're still really dependent on them. Close to 20%, like 19% of our GDP is American exports to America. So whatever we make in Canada, GDP, right? 20% of that's a huge amount. 1/5 of that is stuff that we bring into the US. Right? So if their prices, and they're not importing anymore because it's costly, then it's going to affect our economy because people aren't going to buy anymore. At least potentially a fifth of our economy could be impacted, right? So a couple of things with that. Because the U.S. currency, if the U.S. does that, it's going to make their economy strong, right? Eventually, in the short run, it's going to cost them more money. Inflation is going to be high because everything's going to cost them more,
right?
But in the long run, it'll make them a stronger economy, which is what Donald Trump wants to begin with. So that being said, their dollar will be higher, which may offset the tariffs, right? It may offset the cost of, if they have an import tax, but their purchasing power is stronger than what the Canadian dollar would be, then it might just offset each other. Right. So there may not be a threat there, but who knows?
Right.
Right. Ultimately, it's still bad for our Canadian economy, and policymakers, whether it's at the federal level or the Bank of Canada level, they're going to adjust. So that means Bank of Canada monetary policy, they're going to potentially continue to decrease rates to offset this.
Yeah.
And if the federal level, the federal government, liberals right now, soon to be the conservatives, or potentially the conservatives anyway, they may introduce stimulus packages to boost our economy if that does happen. So what does that all mean?
Which includes what? Yeah.
So that means like during the pandemic, remember when they shut down businesses?
Oh, yeah.
Playing a dangerous game with inflation again.
CERB, right?
Yeah.
SEBA, all that kind of stuff. Like those programs that just gave money to everybody for nothing.
Yeah.
Essentially, what Michael's saying is exactly true. It's going to be inflationary. So for the housing market, if that actually does happen, it's not a bad thing, right? Interest rates will come down. And inflation is going to happen, which means that the value of the dollar is going to go down, which means if the asset price is the same, it just means it's worth more because essentially it just kind of goes up, right?
Right.
But the problem is no one's going to have jobs to buy housing. And if anything, out of all these years of walking this earth and being in real estate, I would say that buyer sentiment is everything. So if people feel crappy, they're not going to buy. Just overall in general. How's the market? It's not so good. Why? Because you're not going to have a job, right? So, but the smart ones will invest, obviously. Smart ones will make a move because they realize it's like, I mean, we were just talking about before this, right?
Yeah.
You know, potentially buying something if the market seems like it's down, and in the next 10 years, will it go even lower? Probably not.
Probably not,
right?
yeah.
So that's an economy in a nutshell, and without looking at all the details and the stats.
Yeah. To piggyback off of that, it's just essentially people who are not necessarily timing the market. Like a lot of people would recommend all of your keyboard warriors. They would say, hey, you guys should always buy at a certain time and make sure you get the best value possible. But a lot of the people that we see now are actually making the move to jump into the market when they can, as long as the property makes sense for them, as long as it financially makes sense. And then we can see them not having to worry about what's necessarily going to happen with the economy because they're already locked in. They're set. Right. All they have to do is just figure out how to survive for the next 30 years for their full term. So we're seeing a lot of that right now. I was fairly busy in December and November of last year with a lot of these home purchasers who said, you know what, I feel like this is the right time for me. And they just jumped right in.
Yeah, let me pick it back on that too. Then my turn. I just talked about that. Anyway. Okay. So, there's two types of purchasers. There's the investors and there's the primary home users, right? So what you just said right there, if you're buying for the long term as a primary home user, who cares what the price is, right? In the long run,
they're going to use it.
You're going to use it. You have a safe place to live. No landlord's going to kick you out. No one's going to raise the rent on you. I mean, yes, taxes might raise, cost of maintaining the place might raise,
cost
insurance,
all the cost of borrowing, all that stuff might raise, but you have a secure home.
Yeah.
It's not like it's multiple, you know how many landlords are out there saying, I want them out because I want to raise the rent. Or even worse, it happened to you too, the non-rent controlled buildings.
Oh yeah.
They literally legally can increase the price to whatever they want.
Yeah. And then imagine those small families who have a kid. Oh, that sucks.
Well, yeah, it sucks because if you're in a home and your kids kind of get rooted in there and they grow some really deep roots with their friends and their school and their neighbors and all that kind of stuff and programs and all that, it's really hard to rip them out.
Yeah.
They get really upset, right? And not even just kids. It's just even if you're used to it. And if you're in an area that's super dense, there's not like the condoed land. If you're in a neighborhood house area, and there's just nothing available because there's a lot of those neighborhoods there's nothing available. There really is nothing available. Condos, there's like right now there's a lot, right? Yeah. And maybe by fact of nature of being in a condo, it's a smaller housing type, so you maybe don't have a family and you could just uproot and go somewhere else.
Right.
But houses, it's not that easy.
Yeah.
And affordability too. And I imagine you're a tenant that just hasn't saved for that shock of, doubling your increase of payments. Right. You just got used to your lifestyle because you've been paying a lot less than what homeowners would pay. But the problem is now all of a sudden it got flipped upside down and you're out of a home because everything got doubled.
Yeah.
Yeah.
Like you're screwed.
Like flexibility is a double-edged sword.
Flexibility is a
double-edged sword. Because on one hand, if you wanted to make a change, if you wanted to make a move, you could because you don't own the property. But at the same time, if your landlord wanted to make a change, if they wanted to increase your rent, if they want to do something that would uproot your life, well, it's not really up to you. I mean, you're renting that piece of property from someone else.
Yeah. That, and also even like say you want to change the color of the flooring or you wanted a new kitchen or something. You just kind of like needed another room, but you're not going to make those changes. First of all, whether the landlord lets you or not, because you're making a capital change, you have to reverse everything. Or it's just like, why would you put money into it? That's something that's not yours.
Right.
Right. So a couple things with when you say home ownership, it depends on if you're a homeowner to live in or homeowner to invest in.
Like if you're buying for buying for yourself, it probably wouldn't matter because, you know, if you look at it 10 years from now, like, will it be cheaper than it is today? Probably not.
And you know, I know that's true with inflation, right?
Well, yeah.
If inflation target is at anywhere from 2 to 3% within that band, that means the dollar is shrinking by 2 to 3%. Right? That means that this iPhone, remember these phones used to cost
$1,200.
Yeah.
less than that, like
$1,000,
$500 or whatever it was.
like
They're
10,
free
15
for
years
that.
ago. Yeah.
Yeah.
How much are they?
Free with
$2,000 for a phone? Like that's ridiculous. All right. And it's just going to get worse because our purchasing power is shrinking quite a bit. Right. Like, I mean, people have done studies out there and if you're at home and you want to do this yourself, just look up the price of a home in Toronto denominated in ounces of gold. And you'll see that it's the same thing. Really. It's the same.
Right.
Right. Which means that compared to, because gold is also moving along with
it does.
inflation,
Yeah,
right?
yeah.
So it's not like the price of the home hasn't changed. It's just that the power of a dollar has shrunken so much more.
Yeah.
By 2 to 3%. And we all know in real life, it's actually more than that, but that's their measure.
Yeah.
So we know it's going to go up in 10 years, in other words. Yeah.
Okay. So it's safe for me to buy today if I want.
Well, yeah. I mean, of course it depends, it depends on where you are in that cycle. Like you could be buying at a trough or you'd be buying at a peak in that cycle, but eventually in the long run, I mean, it should go up.
That's what I tell everyone. Like if it's for you to live and if you're not planning to sell in like, let's just say 10 years, then it's probably a good choice. But if for people investing, like looking to rent it out, it's probably not the best time to do it. Right.
Well,
considering the numbers.
It depends. I mean, there's always buyers, there's always sellers. And I think there's like, so last year there's 65,000 or 67,000 transactions, the year before the 65,000, right? But during the pandemic years, it was like 120,000 transactions. So there's certainly people moving and certainly people buying and selling. It depends on what your goals are.
Right.
I would say it's a bad time to limp in with like 5% down because the carrying costs are going to be super high and the mortgage is high. And I don't know if we'll ever get back to the 2% mortgage rates. Like right now we're at 4% plus or minus, maybe 5%, depending on what you qualify for. Right. So that's certainly a lot higher than 2% rates. If it's back to 2%, 1% rates, mortgage rates, then everybody should be buying. But now at 4 or 5%, you have to like kind of think a little bit harder, right? Also because rental prices are kind of depressing as well too. They're coming down a little bit.
That's why I'm the biggest caller right now. The most number of calls I get right now are the trade up buyers. Right now, it's everyone who already has a significant amount of equity built into their home. And they think, hey, you know what? Maybe now is a good time for me to switch to another property. They're not worried about the value of their current home. They're thinking, okay, what's the next step that I can take? I have built up enough of a nest egg in the current home. Where can I go next? And that's what I'm dealing with right now.
Sell their current home low and then like buy another one low.
Yeah, exactly. They're not too concerned about timing the market because they've already sat on it for a long enough period of time where even if the market is low now, it's not low to the point where they're not making any dollar value on it.
Yeah, I've always said that, you sell low, buy low, right? So that's always a great strategy on just going up anyway. Going down, maybe not so much, but ultimately, again, you can't time that. Like, the economy doesn't care if you have another kid and you want another room.
Yeah,
the economy doesn't care if, knock on wood, somebody passes away and you don't, or like your kids move away and you have all this space and you have an opportunity in front of you to like retire in Mexico, wherever you're going to go, right? Like the economy doesn't care. It's your situation. It's your individual situation. So now you're talking about whether it's a good time to buy or sell in your individual life as a primary homeowner. It's very situational.
Now, what's happening for all us for the young adults out there? What's happening with the condo market right now? Like, I literally just got a question this morning, and they were asking, how long should I wait? Because I think it's still dropping. And then the keyboard warriors are saying waiting until 300K. Like all these things. But like it is going down recently.
I want to address those keyboard warriors first of all. that the average price of a condo is what, like 650, 700 or something like that.
Yeah. We've been seeing a lot of 600s.
Yeah. I mean, no, just like actual average.
Yeah.
I think it's like 700 or something. I got to double check the number.
Yeah.
But let's say they want to they want the prices to drop by half. They're just waiting for it, right? That little meme with the guy with a stick, drop, whatever, right? But it's not going to happen. The reason why is because our entire banking system is going to crash. Look how much mortgage lending is out there, right? If the valuations crash, like how would the government allow that to happen? They're not going to let that happen because everybody's highly indebted in Canada, unfortunately. But like the basis of an asset for which a bank would lend money on has to be secured against some kind of value, right? Otherwise, everything would be underwater if it was dropped by half. It just wouldn't make sense. Like everybody going into it has 80% loan to value, meaning they put 20% down or less potentially, right, when they first start out. So I don't know like what the actual stats are, how much mortgage to actual home values are. So I don't know what the percentage of the overall LTV, because I think the stat is something like 30 or 40% of people out there don't have mortgages. And people that do have mortgages,
something surprisingly high,
right? So
I was going to say that's really good.
Another portion of it would have lower leverage, like it means that they pay down the mortgage. But like the people starting out would have 20% or less down payment typically, right?
Most likely less,
right? So if the mortgage portfolio out there has a loan to value of typically around like 80% or so, and that crashes by 50%, like how would anybody allow that in power? How would anybody with power allow that to happen? They're going
to start printing money before it reaches that point.
Well, that's exactly it. That's what I'm saying. Well, I mean, that's exactly what I'm saying. They're going to stimulate the housing sector. They're not going to let it fail.
Yeah.
They're going to prop it up because it just can't fail. Yeah. Like there's too much things depending on it, right? Jobs, construction trades and stuff like that, right? Like lending is huge.
Yeah.
So it's just not going to happen. So if you guys are waiting for that to drop by 50%, it just realistically is not going to happen.
And the thing about listening to keyboard warriors is that they're not going to pay your rent for you if you have to move. Like ultimately, if you actually have to find something to live in, if you are thinking about buying a place for yourself, a keyboard warrior telling you to wait until a condo apartment hits 300K is not going to buy it for you. They're not.
Well, yeah, they have no stake in the game. Is what
they have no
stake. They have no stake in your situation. They don't care. They're just like saying for the sake of the world crashing. You know what I mean? Like it's not going to happen. And not even that. Just So there's one more thing I was going to say with that point, but we can move on from there. It's just not going to happen. In other words.
Okay.
Oh, that's what I was going to say. Equilibrium. There's an equilibrium. So if it drops down to like, okay, so say it's 650, 700 right now, but if it drops down to like 500 average price, there's going to be buyers out there.
Yeah.
At some point, it's just going to equalize and just, economy 101, right? Economy
Demand's going to boost. So,
right. So what was the rest of your question again?
No, that was literally it. I was just it was just for, the young adults, like when should they plan on jumping in, with the condo market being as low as it is now or as high in supply as there is now? I mean, you got the pick of the litter, right?
Yeah. And will it get worse? Probably. There's a lot more condos coming online in 2025 from all the ones that were pre-sold 5 years ago.
Yeah.
And as you know, new construction takes about 5 years to get off the ground, right?
Yeah.
From zoning approvals to actual construction to selling it out to all that, right? So it typically takes about 5 years from start to finish. So if that's the case in 2022, when rates started going up, buyer sentiment was horrible. Nobody was buying anything.
No.
Especially not pre-construction, which were 20, 30% higher than the actual average resale prices. So why would they, if nobody's buying resale altogether, and then on top of that, new construction is even higher priced, absolutely no one's buying pre-construction. Well, not very many people anyway. Very little. So because of that, from 2022 till now, no one's buying anything really. We're at a really all-time low. So by 27, that's going to be the start of the supply crisis.
Yeah.
There's going to be no new condos. Yep. And definitely there hasn't been any low-rise inventory, like no new housing communities, unless it's really far away in the suburbs.
Nothing significant, at least.
Yeah, there's no new housing projects anywhere for low-rise. Like you won't see it.
No.
So that's already so the new housing supply is condos, and there's no new condos being built.
Yeah.
Or very little. So some people might have zoning from before, and now, when times are good, they'll just start executing now. So you'll see something. It won't go to zero, but it's going to be approaching zero. So you can look up that graph if you want to. But essentially, there's going to be a huge supply and demand imbalance in 27 onwards, 28, 29.
Yeah. And then at that point, that's eventually. So it's going to dip down for a bit until it gets hot again later.
Right. But if you're qualified now, right? If you're, who knows what will happen with your job, right?
Right.
Not saying you should go into it thinking that you can get unemployed because then you can't afford the mortgage and that'll be even worse. But if this timing's right for you and you find the one you like, you find the home you like, why not pull the trigger? Like Louise, like you say, it's a 10-year game, right? If
I know.
not more. By the time you actually move, just think about if you're like listening to this or watching this, and just think about how long you've been in your current place for, right? Like chances are it's going to be a few years, at least a couple of years.
Probably more than that. That's what I was saying to you. Like, I'm not in a rush, but if I find the right place, like, why not, right? Like, why not pull a trigger? Like, who knows what's going to happen in 2-3 years? Will I be able to afford? Probably not.
Yeah, and the other thing is, if you can't afford a home and you're lucky enough to have parents that own a detached home here, right? Maybe the other avenue is to actually build a main suite, a garden suite.
Which we have a podcast on that one already.
Yeah. You can build like, you know, it's the only housing thing that's working right now, I think, for investments anyway. But $350 to $400 a square foot, let's just say, that's on the high end, right?
Yeah.
To build a house, so you build 1,000 square foot place, it might be 400,000 at the highest. You get the land kind of for free if your parents are cool with it. But essentially, you can buy 1,000 square foot condo for 400,000, right? So that's another way to look into it as well.
Yeah.
And if you ever need help with that, we got contacts for that. But like, you know, we help you manage that project as well. But essentially, there's ways to home ownership that I think a lot of people should consider. And if you're looking at selling something, well, again, it's all very situational as well too. So we can't just give blanket advice on this podcast, but I think it's important.
Yeah, everyone's situation is unique.
Yeah, there's a lot of nuance involved.
Right. But in terms of the timing though, right? Like it really depends. I mean, there's also other opportunities you can jump into if you had that cash on hand as well. You can maybe, here's your chance to upsize your investment or move it to a different category. So instead of a single condo, you can go into duplexes, triplexes, or even commercial storefronts, things like that. Or you can move it to a fund or something that actually produces cash flow. Because right now, nothing's really cash flowing, right? Unless you have very little leverage on it.
Yeah.
Meaning like no mortgage.
Very little.
Well, like I would say about 50% or so. Right. You know, if you had a mortgage of 50% loan of value, then that's when you can start really like break even. Like if you were going to buy something new. So I don't know. I think there's a lot of options out there.
Perfect. Yeah. I think that ends up the topic over here on housing being more affordable in Toronto. Anyone want to end it off?
Any predictions? No? Okay. Well, if it's me, I think that right now it's relatively flat market. Not saying buy or sell. I'm just saying whatever is suited for your situation and your needs are. If you think, you know, in the long run, I believe real estate is a long-term, good, stable asset that's going to grow in time, over time. And there really is not much you have to do with it. I mean, even if you're worried about tenants and all kind of stuff, like our property management company is great.
Yeah.
At the end of the day, not us, another property management company. It doesn't matter.
Even if you do end up paying something, at the end of the day, they're still helping pay off your own mortgage. So
So all right, thanks for listening, and I guess we'll catch you more regularly next time.
Thanks, guys. Bye.
See ya.
Bye.
Add it up. Thanks for sticking out to the very end. I hope you got some value out of this. Do me a favor, please press like and subscribe. But more than anything, leave me some feedback so we know what to produce for you going forward. Thanks again.